Is Sydney in a housing bubble? Let's have a look. Hello everyone, Florian Heiser here and welcome to another episode of Heiser Says. Grab your stein of coffee and let's have a look at, some recent information from UBS, their Global Real Estate Bubble Index for 2020, and ask ourselves if Sydney is actually in a housing bubble. Now, for those of us here in Australia, well, just looking at, and I'm bringing up my chart here, looking at the growth in property prices, one would argue that Sydney is perhaps in a property bubble. It's quite expensive compared to the average and median wages just to get into the housing market, and some of the stories that we hear of people, first home buyers buying stuff over $1 million, little tiny shoebox, is a little concerning. But let's look at the UBS perspective, because with their real estate bubble index, compared to some other cities around the world, what we'll do is we'll bring up here, this is the CoreLogic data. We can see the median house value in Sydney is $866,000. That compares to other cities like Melbourne at $678, Brisbane a cool $500 with change, Adelaide $441, Perth $439, it's gone up, Hobart $486, Darwin $384. The first number I've said here that seems reasonable for a house, maybe it's because I know how much these speckies cost to make, and then Canberra at $641,000. So, it would be remiss from us to not think that Sydney's in a bit of a bubble, So let's jump and look at what UBS is saying. So what they've got here. So how does COVID-19 impact the property markets? We'll have a look at this. Well, first here, UBS Real Estate Bubble Index. Find out which cities have the greatest housing bubble risk and discover the latest housing market trends. So the UBS Global Real Estate Bubble Index analyzes real estate property prices in 25 major cities around the world. In this year's edition, we discuss the housing markets of some of the cities on the list and the impacts of the pandemic and its potential long-term adverse effects on urban housing. Now, we've started to see earlier today, I did a video where there was, a surge in property in the regions in Victoria. There's talk about the COVID-proof properties, and people are moving out to the country, moving out to country towns. And they're getting crazy price growth, but they were already quite low then. I mean, would that be something you'd be moving to live in or as a rural investment? I mean, you might buy out there if you suspect there's, there's a new project coming up or a new mine opening up, and there could be new opportunities there. So we'll just go here full screen so we can see it all. So the housing market appears to be weathering the coronavirus relatively well. Well, here in Australia, you've got to understand, we still have all these support mechanisms. We've got mortgage holidays that are now just starting to taper off, and some people can go on longer. You've got JobKeeper propping up businesses. Even though it's been reduced, it still is propping up businesses. You've got JobSeeker with a bonus that's increased to make the sting of unemployment less troublesome on people. And you also have, the most concerning thing of all is trading while insolvent right now. So they've got the rule books for running a company, and they just pretty much chucked it all out the window. And then you've got the government, particularly here in Australia, giving out bribes, grants, and the kitchen sink for people to get into property. So it's understandable. Plus, you add to that the difficulty with selling right now with the lockdowns, the restrictions. Some people are probably thinking, you know what, I won't jump into the market right now. I'll hold back for a little bit longer. So supply is reduced. So it is an interesting time. Saying that it's, weathered it relatively well, it has, with a whole lot of propping up. So remarkably, house price growth has accelerated this year. But the pandemic seems to be making some reconsider where to live. The rise of the home office and pressure on household incomes in the light of already barely affordable city apartments make living in the suburbs an attractive alternative. Taking these factors into account, some adverse long-term effects on urban housing demand are likely. So could the surge in regional property in Victoria be the first sign of this happening? Are people going to make the green change? If you can live from home, work from home, if you can work remotely, maybe you only need to drive in the city or fly into the city every now and then. Wouldn't you like acreage or a little bit more space? So, what are the greatest bubble risks in 2020? Now, I'm going to have a shot of my coffee, and I want you to let me know in the comments if you think Sydney is at a bubble risk, or if it isn't. Well, I know the title of the video said it isn't, but how close do you think it is to a bubble risk? Okay? Okay. So, we've got the interactive map here, and we can see. So right now, we can see Sydney is sitting, and I'm covering it with my face, 0.75. Now, it is only considered overvalued, and it is only halfway between overvalued. So overvalued here is 0.4 to 1.5. A bubble risk is greater than 1.5. Fair value is negative 0.5 to 0.5. And undervalued is negative 0.5 to negative 0.5. So Sydney, everyone, Sydney, remember where houses are sitting at what is it? 800 over nearly 900,000 with change is not considered a bubble risk. It is just considered overvalued. So, and it's gone down. It was at a bubble risk in 2018. Oh, no, sorry. It was significantly overvalued and probably closer to a bubble risk in 2018. 2019, it was 0.88. And 2020, it was at it's now at 0.75. And if we bring up here, we can see there has been a bit of a correction in property prices in Sydney since then, not as drastic as some of the other cities. What do you think, everyone? Do you agree with that one, that Sydney is only just overvalued and isn't at a bubble risk? So let's have a look at some other properties here. I mean, let's look at Europe, guys. Amsterdam is at a bubble risk. 1.52. So it's gone down from 1.84 last year, and it's still lower than 1.65 in 2018. Frankfurt, look at Frankfurt, everyone. Look at that bubble risk. I know we have some German viewers here in the channel. What is it like over there? I think I'm just thinking to my family. They've all moved to Austria, those that are left. But I know the cost of housing over there is ludicrous. 2.26 there at a bubble risk. München, 2.35, up from 2.01 and up from 1.99. Paris, 1.68. It's now at a bubble risk. It wasn't before. So Sydney it's not at that level. And you've got to remember, in Europe, they've got all the negative interest rates there. Zurich, 1.51. It's now in bubble risk. Last year it wasn't. It's up from 1.4. London is down. In 2018, it was at a bubble risk at 1.61. It was at 1.31 in 2019, and now it's down to 1.26. Warsaw, there you go. Fair value. Warsaw at fair value. So is that it, guys? Do we all have to move to Poland? Milan is at 0.23. Fair value. Dubai is at fair value. Negative 0.4. Singapore at fair value at 0.48. Hong Kong, not at all. It's going down. It's getting more affordable, but it's still at a bubble risk. Tokyo in Japan, 1.2. I mean, the housing is not cheap there. We've got Madrid, fair value, down from overvalued in 2019. Boston at fair value. You've got Toronto in Canada at 1.96. If you watch any of Mike Martin's stuff, just the property over in Canada is just as insane as Australia in many ways. Chicago, it's undervalued in Chicago. I don't know what employment opportunities there are in Chicago at the moment. But then again, San Francisco, it's overvalued, not at a bubble risk. Los Angeles, overvalued, not at a bubble risk. New York, it's overvalued and not at a bubble risk. So here we have a bit of insight into some of the different properties, guys, around or cities, and if housing is overvalued. So I thought we'll go through the key takeaways here. Home prices in Singapore have increased only slightly over the last 2 years, and they've treaded water in 2020 during the recession that has resulted from the pandemic. Attractive mortgage rates, balanced market fundamentals, and resilient demand should limit the downside. In Zurich, The willingness of potential home buyers to pay will likely decrease in the city centre over the next few quarters if the economy remains in crisis mode for a longer period. The high price in the Swiss owner-occupier home market will eventually be unsustainable. New York is a truly global city and should stay relatively attractive to wealthy investors beyond COVID-19. That said, homeowners are very likely to see an adverse impact on property values from the pandemic in the foreseeable future. And investing in real estate. Now, I thought this is quite interesting. Housing is a key longevity asset and to some degree an investment good. However, as an illiquid bulk holding, housing is not usually seen as part of the financial asset allocation. How would that sit with a whole lot of Australians here? Just think about that. Our Australian obsession with property. Every TV show is about property. Government is throwing everything at property. Everyone wants to get into property. You know? And it's usually not seen as a part of the financial asset allocation. Home ownership typically comes with leverage. If the loan-to-value ratio is not excessive and the household has sufficient financial reserves, a home can serve as collateral for long-term financial investments. Long-term mortgages can also mitigate the interest rate risk. First home buyers should build up wealth with a focus on relatively liquid assets and seek to diversify their balance sheet. See, this is not advice you'd hear coming from, well, any of our Australian politicians or any of the spruikers in the Domain articles, would it? Would it? Seriously. It's just first home buyers. Get in. Use property to save. And the prospects for buy-to-let investments in many cities have deteriorated. Private real estate solutions are a better alternative in an environment with low yields and rental growth uncertainties. So there we have it, everyone. Sydney on a global perspective. It's just overvalued. It's not a bubble. What do you think? What do you think? Does it feel like it's just overvalued to the Sydneyites down there? Do you think it's in a bubble? Could it burst? Or is it just, again, compared to other places in the world, Australia is going to be attractive. Australia is going to be attractive. And, well, will the government just maybe make it a bit easier for foreign investors to come back into the market here in Australia? What do you think? They're going to kick the can down the road every way they can. I would not be surprised at all. As always, thank you for watching. Let me know your thoughts and opinions in the comments down below. Please like, share, and subscribe to the channel. If you're a fan and want to support the content I create here, there are a few ways you can. You can join the channel on YouTube or Patreon. You can support us using our affiliate links at Amazon, eBay, Independent Reserve, or KuCoin. You can buy merch from Heiser Says, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, everyone. Have a great day. I will see you all in the next episode.